Good morning, good afternoon, and welcome again to the latest ADM Agriculture YouTube market update. I'm joined this week by my colleague Freddie Humfrey, and this week we're going to have a look through the technicals of the market. So I'm going to hand over to Freddie and let him walk us through these markets. Freddie.
Nice one. Thanks, Jonathan. So first up, we've probably got the most exciting one. We've got Chicago Board of Trade wheat on the deck 21, and it's the daily chart. So recently we've seen the medium-term uptrend A to B. That's been broken, and we're now in a short-term downtrend. Within that, we've had a formation of a head and shoulders top, with B being the head and two shoulders circled in blue. This is a significant bearish pattern, and the neckline at 722 has been broken in recent days. So that just adds to that bearish downtrend and argues for a potential retest of the full A to B move. We add into that a spike in volume on the neckline break day, which you can see at the bottom circled in red. Within this downtrend that we've got Fibonacci and historic levels of 722 cents, 700 cents, and 685 cents, all as key downtrend support potential areas. So key areas to keep a look at. Moving on from Chicago and swiftly into a slightly close to home Matif contract. Again, we're looking at the daily, and this is the deck 21 contract. So as you can see, we've got a nice recent uptrend. Both of them have been broken by a short medium-term downtrend from the contract high of 257.5 euros. The 240 support giving a bit of a wedge pattern, as you can see currently, and a break below that 240 gives a targets of 233, 226 and 220, which tie again nicely with the Fibonacci retracement levels of that low back at 198.50 all the way up to the high, and also from the historic levels that we've seen give support and resistance back through to the highs of May 21. Quite interestingly, we just highlighted it in blue at the top of the chart there. That's quite a nice dark cloud cover reversal, and that again circled in red at the bottom, combined with a nice spike in volume, just to really confirm that bearish reversal. So yeah, a nice little pattern there as well to keep an eye on. Moving forward and closer to home from a UK perspective, we've got a London wheat again daily November 21 chart. We had a nice long-term uptrend on the A to B, started on 13th July at point A. That was broken at the back end of August following a weak variation of an evening star that we've highlighted there in blue, again, which combined with a pickup in volumes that you can see on the bottom of the charts. So the trend break was confirmed at the very back end of August, in which the short-term downtrend commenced. Having moved through 188 in recent days, we see 181, 182 as support and the next target. And to be honest with you, we're pretty much there or thereabouts at the moment. So with that gap we saw opening this morning. The fib retracement levels on the A to B up move actually give some really nice historic levels as well of 188, as I've just touched on, and also the 181, 182 support line. So the historic levels and the Fibonacci tying in quite nicely. To add to that bearish tone, we've got the short-term moving averages also stacked negatively now. So it's just adding to that continued psychology of a downward moving market. And then finally, just moving away from a straight derivatives contract, we've got the London wheat versus Matif wheat. So Matif in December and London in November, all in sterling, and we've got that spread on the chart there. Again, quite an interesting one. Market fell off the cliff at the back end of July very aggressively as the specification spreads between the two contracts were being pushed by the realities of a really poor quality European and also UK crop, obviously Matif being a higher specification than the UK London wheat contract. So minus £22.5 where we find ourselves currently, found support and saw a significant rally back up into the overhead resistance of minus 15, minus 16 about 2 weeks ago. And when you trace that back, that minus 15, minus 16, you can see on the left hand chart was a support level back in Feb 21. So the market should find a little bit of support around where we are at the moment, having bounced off it a couple of weeks ago. So yeah, at this sort of level, it's looking a bit more supportish. supportive, albeit the short term is to the downside, and that has been pushing levels significantly lower. So yeah, quite an interesting market. As I say, we started the top of the call with that Chicago contract with the head and shoulders potential and the neckline break. It's quite an interesting one from a technical side, and yeah, will hopefully give the global market some real direction.
Yeah, it's interesting. Thanks for that, Freddie. I mean, when you look at that UK versus Matif spread, certainly makes UK wheat look very cheap in comparison, and we are starting to find a little bit of export demand as a result. I think it's always interesting to look at these markets from a technical point of view and have that an appreciation of what's going on from the technicals. I think fundamentally, we would still say that there is a tight balance sheet. And of course, we've got the USDA updating us tomorrow night. So it'll be interesting to see what they come out with. But from a technical perspective, as you've just demonstrated there, certainly for now, the market is in a downward trend and approaching historical resistance levels. So it'll be interesting to see where we go next. Thanks very much, Freddie, for your time today. Thanks to everybody for watching. If you need any more information or would like to get in touch, please either contact your ADM farm buyer or alternatively, don't hesitate to get in touch with us using the contact details at the end of this call. Thanks again.
Thanks, Jonathan.